Hello, welcome to ED Trading. So it's been a while now. I dropped videos because I've been busy with a lot of stuff. I've not really had time to come online and do anything about trading. But now I'm back, so you'll be seeing more of my videos every week. So in this video, we'll be analyzing the trade that happened last week. We'll be analyzing all the movement of the market from Monday to Friday. So we'll be using Bollinger Band and trend line to analyze the market that happened. I'll be showing you where to take a trade, trades to avoid, and mistakes you need not to make, and also the time you are supposed to trade. And if you like this video, if you want me to be analyzing the market every week, Friday, drop a comment below and also give this video a thumbs up. And also, if you're new to this channel and you like this video, don't forget to hit the subscribe button. So let's begin. So to analyze this trade, we'll be using Euro USD. So first of all, you set your Bollinger Band. I've already talked about how to set your Bollinger Band in my previous video. If you don't know the setting I'm using, you can as well go back and watch some of my previous videos to learn how to set your Bollinger Band correctly. So we'll be using Bollinger Band and trend line. So just locate last week Monday. Last week Monday is around 8. It's on the 8th. So there you go. So last week Monday is on the 8th. So it's 4 a.m. 6 a.m. So I'll advise you when you want to trade, the best time for you to trade is start trading around 9 a.m. so that you'll be on the safer side. So but now in this video I'll be analyzing the trade from 7 a.m. so till 4 p.m. That's the best time to trade. Anything outside around after 4 is not good to trade. It's kind of risky. So you try to avoid the trade during that time. So let's go. The first thing you do when you want to trade, opening your asset, what you do is you get a trend line. So we'll be using trend line in this video. Let's put our trend line here. Change the color to okay, let's use yellow. Is it bright enough? Okay, it's okay. So the first thing you do when before trading or after opening your asset, after choosing your asset is you look for the trend. Where is the trend? You look for where the trend of the market on that day before that you want to trade. So as you see, this 6 a.m. This 6 a.m. and what we can see here is that this market is in an upward movement. This market is in an upward movement. If you agree with me, because you see the movement from the bottom like this going up. So let's go and see how the market moves. Okay, then when the market is moving, then you see a bearish candle, after an upward movement. Then you take your trend line and you put it at the top of these two bearish candles. Then you wait. You see your trend line is at the top of these two bearish candles. You wait for a retracement. You see a retracement here. You see a bullish candle. You wait for a bullish candle to break. You wait for a bullish candle to break this top of this trend line. Then you buy immediately. You buy immediately. So now you only buy. I advise you to only, when using this strategy, you only buy once. You wait again. So you see a bearish candle. Then you take your trend line and put it on top the start of that bearish candle. You put your trend line on top that bearish candle. I don't know if this is clear to you. So you put your trend line on top that bearish candle. Then the market is moving, it's moving. So what we're doing now is we're waiting for this bullish candle to break again, to break up before buying before buying, because you already know that you're in an upward movement. Then it moves, it moves, it moves, it moves. There's no break. But now I it moves, there's no break, but now there's something happened here. You see a bearish candle after this movement, because we already know that we are in upward trend. Then you see bearish candles like this, you see bullish candles like this, then you see a bearish candle that retraces like this, and also see a bullish candle that follows like this. The next thing you need to do now in this situation, you need to buy immediately at the next candle. You buy once, or you can buy twice, but it's good to buy just buy once, and so that you be in a safer side. So I will explain more about this movement in my videos to come, in more videos that I'll be uploading. So now we're just trying to analyze the market quickly and get done with it. So you buy, you see it crosses here again, you can buy immediately, or you just leave it. You buy, you won. Then you see a bearish candle again and a bullish candle. Immediately you buy at the next candle. Why? Because you already know that you are in an upward trend. So you can buy again. Then you wait, you see a bearish candle, a long bearish candle, another bearish candle. Then you see two bearish candles. You take your trend line and put it on top the bearish candle, but it must be the retracement must be either two candles or more than two candles. So you wait, and you start seeing bullish candles. Then you see a break here. You see a break here at the top here. So you buy immediately. You buy immediately. So you need to buy, as I said earlier, that you buy once and just to be in a safer side. So you buy, then you wait. What's the time here? Okay, so this is I think this is around 4:15. You stop trading around 4 o'clock. Stop trading around 4 o'clock. Anything outside 4 o'clock, don't trade again, because when you trade, you'll be in a risk. The market is not good towards that time. Just stop trading around 4. So we're done for Monday. Let's see the market that happened around Tuesday. So let's see what happened Tuesday. Okay, so this is 7 a.m. Tuesday, 7 a.m. So you take your trend line. So what do you see about this market now? What do you know about this market? You see that as I told you, that you look for the trend of the market. You see that you are in a bullish trend. So when you see a movement like this, then you see a bearish candle, another bearish candle following each other. You take your trend line, you put it up at the top, then you see a bearish candle, bullish candle, bearish candle, bearish candle. Then, as I said in the other video, that when you see a bullish candle, then you see another bullish candle following after a bearish candle, another bullish candle following the bearish candle, you buy at the next candle. You see, you won, you buy at the next candle, you buy immediately. Then you wait, then you see two bearish candles like this. You bring your trend line down to wait for a cross. So after seeing this, you buy immediately, and take your trend line up. So if you want to risk it, if you are a trader like risking it, you bring your trend line down here again to this bearish candle on top of these two bearish candles. So after you open, you see the next candle, you won. Then you wait for a movement again. You see, now you see a bearish candle, then a bullish candle, and if you remember, you're still in an upward movement. So now you see a bearish candle, a bullish candle, you buy immediately at the next candle. So now if you can look at the time now, this is 4:15. So you stop trading around 4 o'clock. So you wait for the next day, the movement of the market for the next day to happen before trading again. So we are done with Tuesday market. So we'll be going to Wednesday to see how the market moves on Wednesday. So we're going to Wednesday to see how the market moves on Wednesday. So this 7 o'clock. See, you can see 6:30, 6:15. So I think this 7 o'clock here. So now from the look of this market, you already know that you are in a bearish trend. So you take your trend line and put it at the bottom of this bullish candle, these two bullish candles. Then a movement, a break, you sell immediately. You sell at the next candle here. You sell immediately. Then you see a bullish candle, you wait, another bullish candle, you take your trend line, you put it just at the bottom of this, then you wait for a cross. You see there's no cross, then there's a bullish movement, like a retracement here. You wait, then you see a bearish candle, a bullish candle, bearish candle, you wait, you see another bearish candle here. But now you have to sell at the next candle. Why? Because if you have watched my previous video, you know that this is one of my strategies that I uploaded earlier, that after a trend, then you see a bearish candle, a bullish candle, and a bearish candle, and a bearish candle, you sell at the next candle. Or you see after a bullish trend, you see a bearish bullish candle, a bearish candle, a bullish candle, and a bullish candle, you buy immediately. So now you sell at the next candle. You see you won, then you sell again, you sell again at the next candle, you see you won, but you're not permitted to sell more than twice. So it's only good to sell twice or once. So because selling more than twice, you may lose the trade at the next market. So now you sell just twice, you wait again, you wait for a retracement. Now after selling like this, a movement, there you see a bullish candle, you can either sell immediately or you just avoid the trade. After selling, you see a bullish candle like this, you can either sell immediately or just avoid the trade, because you've won twice. There's no need to take any risks again, because most times you end up losing or winning the trade. So you see you won, then the next trade, movement again, then you take your trend line, put it downward here. After this, you wait, you see, then no break. So now you see a cross at the break here, you see a cross, a break downward. So you sell immediately at the next candle, you sell just once at the next candle. So as you can see, this is around 4:15. After winning your last trade, you stop trading. As you can see, another successful day of trading on Wednesday. So let's go to Thursday and see what happened on Thursday. Let's go to Thursday. So you can see this is 6 a.m., 6:45 a.m. So this is Thursday, this is like 6 to 7 a.m. So as you're looking at this trade now, we are looking at bearish trend, because you see there's a lot of bearish candles here more than the bullish candles. So we know with time which trend we are, but I'm thinking that we are in a bearish trend. But most times you don't know where the market is going to till it happens. So you just need to be careful, don't guess, try to be sure of how the market is moving before entering a trade. So we'll take your trend line and put it down here, just below these very bullish candles here. So we'll see what happens. Wait for a break, because the market is telling us that we are in a bearish trend. So you wait and see if there is a break. So now you see a break here, so you sell at the next candle. Now I want to explain something to you. it's good to sell once. But now, since it's at the open of the market in the morning, since it's at the open of the market in the morning, you can sell twice and stop selling. You can take just two trades and stop taking a trade. So you sell, you won, you sell again, you won, or you just stop selling at the first candle. Then you take your trend line again, you put it downward. So you wait for a break again. See a bullish candle, a bearish candle, a bearish candle, a bullish candle, a bearish candle, a bearish candle. So you see another bearish candle, then you sell immediately at the next candle. You sell, you won. Now I told you at the last trade that you sell twice. When you see this my strategy here, then you sell again, you won. Then you stop selling, then you see a bullish candle. I also told you that when you see a bullish candle after you sell, after this my strategy shows up and you've taken a trade twice, you either take the next trade or you avoid it, because most times it wins and most times it loses. But I also advise you that you should not take such risks because you have already won two trades. So you need to avoid the trade. So you see, lost here, then movement, then you see a candle, a bullish candle, a bearish candle, you wait for the strategy to show up again, then you sell at the next candle, you sell, you won, you sell again, you won, you stop selling, then you wait, then you see a bullish candle. There's no need to take any risks again because you have already won twice. You either sell or you avoid the risks. Then you see a movement like this, you wait for it to break again. So now we are already at 4:15. So you stop trading. You can see this is also a successful trade, another successful trading on Thursday. So we'll be going to Friday and see what happened on Friday. So we'll be going to Friday and see what happened on Friday. Uh, okay, you can see this is a very, very, very good way. This strategy I use most times to follow the market and to know how the market moves. So when you see, let me zoom it a bit. So from the look of this trade, we will see that we are in an upward movement because this candle starts from bottom here and goes up, and the bullish candles are more than the bearish candles, and that's how the market, but we don't know till the market continue going. But now it's just a suggestion that you may be in an upward trend because it's showing you that you're in an upward trend or a sideways movement. So now let's see how the market goes. So you see a movement like this. I think you wait for 7 a.m. to 6, 7 a.m. Yeah, this is blocking us, but I think we'll just work with this. I'll try to make it to bring trade further. So 7 a.m. So now you can also do, there's something that you can do after seeing a long movement, a movement like this, the of bearish bullish candles. Then you see a bearish candle, then a bullish candle, you buy at the next candle, because you buy at the next candle, or you wait for a retracement to happen. If you're a risk taker, you can buy at the next candle. Most times it wins. Then you wait again, you see a bearish candle, a bullish candle, you buy at the next candle. Then when you see a bearish candle here, because you already know that you're in an upward movement, you take your trend line and put it at the top there. Then you wait for the candles to cross, to break, so that you can start buying again. Then you see a movement like this. Then you see a bearish candle, another bearish candle. You take your trend line, you drop it down here. Then you see after the cross here, you take the next trade, you lost here. Then you wait for a clear movement to take a trade, because after seeing all this, you know that the movement is not clear. You have to wait to be sure of what you are doing, or else you just start losing your money, start losing, and it's not good. So after you lose, you wait for a very clear movement. It's either a movement for a bearish trend or a bullish trend. So you just need to wait for the market to move. This is the end of the trade for the day on Friday. So after, I think, let's see, you won from the open of the market itself. When you won one, you won one. So you won two trades and lost one on Friday. So I think it's also a good day, a productive day of the week. So this is how to follow a trade. This is how to follow a trade. Uh, Weekly trade. This is how you trade. The mistakes, you've seen the mistakes you don't need to make. So in my videos that will be coming every week, I'll be highlighting some mistakes also to help you in your trading. And also, if you like this video, if you think this video is good, if you think I should be doing more of these videos, drop a comment below and let me know what you think about this video. And uh, so that's all for today. Thanks for watching. Please don't forget to hit the subscribe button if you like this video and if you're new to this channel, so that you can see more of this video.